Hello, and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 Pips, rocking and rolling here on the 11th of March, 2018. No trade calls, no recommendations, and we're responsible for their own stuff. We're here for educational purpose only. So, what's going on, and what is going on? Well, basically, we have to start with the NASDAQ, right? Just going to try and keep it very, very technical this week. And so let's start with the NASDAQ. So as we said, the NASDAQ was looking much stronger than the other indices. On the retracement back down, it held the 50 DMA quite nicely. So unless we got a close below the 6,700, our base case was still that it was going to try and take out those highs. Now that it's actually broken above those highs, it's, whatever, there's very little you can say apart from the fact that this looks very, very bullish, very, very good, right? A couple of people wrote in asking for upside targets on the NASDAQ. What we have in terms of primary target is 7210s, 7211s, and in terms of extension targets, 7430s, pretty much 7530s. It's a big extension target. So here, very little to say except for the fact that it was stronger, it was looking strong, it stayed strong, and it's broke those highs. Now, going into the week, what you clearly, as usual, fairly basic stuff, what you want to look at is how we trade at those highs and on that 7,000 mark on any retracement. Any retracement that gets bid, you'd expect it to continue moving higher. If we break below, then we would expect profit taking to come in all the way back into the 50. Again, even if it breaks higher and it comes back down to the 50, this is still going to be a series of higher highs, higher lows. So this has to be the base case expectation unless you get a daily close below the 50 DMA, a daily close below the 6,700. This is very, very bullish, right? The other let's see, what's looking at the ES, right? The ES is lagging a little bit, so is the YM, so we'll have to see what happens here. Now, our base case going into last week when we were still holding below the 50 DMA was that we were going to try and complete this symmetrical move for a move back pretty much into the 2440s, 2450s, this range. So right here, no need to sugarcoat it. It ain't looking good, right? So it's not, it looks like it's holding heavy. I think what you want to look at here, there might be a little bit of hope, but really it's not looking good. So 2,800 pivotal level, bullish above, bearish below. So here, unless you get any kind of big headline, what you would expect is the market to take a stab at taking out that 2,800, and then what happens, the new bull bear line becomes that 2,800, right? So basically this is shifting higher, right, as the price is holding strong, and we shift higher, and that's going to be the new pivotal level for the week. And unless we get a close below that 50 DMA, etc., it's still going to be fairly bullish. Now, what's interesting is that the 100 is going to be coming in line with this 2,700, so that's going to be a key bull bear line if things start to trade a little bit heavy. But in the week, going into the week, as long as we hold above this 2,800, you'd expect these highs to ultimately attract. Now, it's going to be interesting to see if we see the kind of rotations we saw even last year when we had, divergences between the ES, the YM, the Russell, and the NASDAQ. So here, what will be interesting to see is if we see profit taking on the, you want to be careful if you're to the short side is, should you see some profit taking on NASDAQ and you see it all coming into the ES, so you see the NASDAQ selling off, but you see the ES and the YM ripping, then we're back to last year. So there's really very, very little edge in trying to stay short, right? If you're looking for the bearish case, you want everything to trade heavy at once, right? But here, one chart at a time, still looking at these moving averages that they're guiding quite nicely, because what we said last week, right, our expectation was hold below the 50. We'd expect it to continue to probe lower. If we traded back above, then 2,800's attract. So it's fairly technical, right? Very hard to argue with the moves. The market is moving in very nice fashion. Now, a lot of people looking at the bonds here. Now, you would have expected the bonds to do a little bit more, but you see they're holding extremely heavy, right? So if you look at the ZNs on the weekly, this is the chart we're working with, right? So what's interesting is that they're not budging, right? They're not budging. You would have expected them to bounce here, right? You also see here on this, let me just move this, on this weekly, right? You see all these wicks coming in. So it's trying to base, and you would have expected, but very tight range, and it's not going anywhere. So I think this is still the thing to keep in mind, right? You want to watch this because if they don't bounce, you could get an ugly flush to the downside. So that's the thing that's, I think, confusing a lot of people. Our base case is still that this is heavy and that ultimately we have to move back down into the extension targets. But what we thought is a healthy move would have been to see a little bit of a bounce here, possibly back up into this 122, 123 zone, and then we try to complete the move in extension. Here it's holding very, 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 very heavy, right? And if you look at the ZBs too, right, and look at them, same thing. They're trying to bounce, but they're not going anywhere. And you can look at it on the daily, right? It's just being stuck. And, you could draw any kind of lines of stuff you want to, but it's stuck, right? It's heavy and it's stuck. I would tend to think, or the suspicion would be, again, I'm sorry, I promised it was only going to be technicals. I guess I lied. So, but my suspicion, the thing I have to ask myself is are we going to see positioning squaring something into the FOMC in 2 weeks' time, or is this just going to continue to chop around until we get something out of the FOMC? I think the risk, and I mean the risk because as traders we want volatility, we want moves, is that this DXY, etc., they stay fairly sideways until we get through that FOMC. So maybe we go through a period of 2 weeks where we don't move that much. We'll have to wait and see, but they're not going anywhere and holding very, very heavy, right? And that brings us to the DXY, right? So you see, we've been looking at this chart for quite some time. So a lot of people arguing that this is bullish. Some people say it's still stuck. It's still not going anywhere, right? It's same like the bonds. It's heavy. You would have expected it to bounce, but it's not bouncing, right? So I think here what you would say is I'd stay exactly like we said on the indices, right? Look at these moving averages on the daily and let these guide. If we get a daily close above the 50, then we're going to entertain the possibility of the market trying to squeeze back up into the 91. Daily close above the 91, we're going to entertain the possibility of the market squeezing back up into the 100. As long as we hold below the 50, base case has to be that this is heavy and that it will likely continue to try to probe lower. And you see this exactly, manifesting in a lot of the other currency pairs, right? And we've been talking about this for a while now. It's just much to do about nothing, right? Look at the weekly on the yen, right? So our base case on the yen hasn't really changed, right? Our base case on the yen hasn't changed at all. It's that as long as we hold heavy, we hold this break, the potential is for this to unwind all the way back into the 100, right? But zoom in on the weekly and look at this, right? 2 weeks ago, very heavy, and last week, bam. So we haven't gone anywhere, and we're pretty much still inside this bigger candle, right? We're still inside that, and we're not going anywhere. We're just buying time. So you can easily make a case whichever way you want, but bottom line is we're holding the most recent major move, which is heavy, but we're not going anywhere, right? And it's the same thing if you look at the euro, right? Again, would it be healthy the way the euro is trading here? Look at it on the daily, right? Where it's kind of stalling at this level. Does it look like it's struggling a little bit and it may want to come back down into this level and retest the 120.50? Sure, but look at it on the weekly, right? And keep in mind what we said about things not really going anywhere 2 weeks ago and last week. So again, there's plenty of fuel for if you have a bullish bias to say we got to rip higher, if you've got a bearish bias to say this is going to hold very, very heavy. But the truth is it's still kind of stuck here, right? And the suspicion is that's why I said, is it going to be 2 more weeks? We got a risk of it being 2 more weeks until we get into the FOMC. And it's exactly the same thing on gold and on crude, funnily enough, right? It's all the same chart, really. And we've started a move, and now we're really not going anywhere. So unless we get a big piece of data or something that sparks some movement, I think what we have to be aware of is that we may have to be patient until we get through the FOMC. Now, I hope I'm wrong on that because, of course, I'd like to see plenty of moves, plenty of opportunity every single day of the week. But that's what it's starting to look like right here, right now. Okay? Thank you for listening. Thank you for liking. Thank you for sharing. Again, if any chart anybody wants me to post, I'm more than happy. Just hit me up on the blog on Twitter. I'll post it out. Have a great one. Thank you for listening, and as always, and let's see if we get some interesting moves. Have a great one. Bye-bye. Thanks, guys.